So first and foremost, I want to thank everyone for joining us on the webinar today in our course on negotiating or renegotiating the terms and rent in your dental office lease. My name is Ryan Cathers, so I actually manage and oversee our consulting healthcare leasing team nationally. And so it's my pleasure today to take you through this particular part of the practice that it's not covered in dental school. It is becoming a new trend in it, but particularly an interesting component for that. So in terms of myself, I've been with Cirrus a little over 4 years now. And prior to Cirrus, actually my experience was in healthcare and product distribution for healthcare practitioners. But in terms of today, I think it's important not only to know a little bit about myself, but a little bit about Cirrus and who we are, what we do, and how we support the dental community across the country, or across North America rather. So we're actually founded by dentists for dentists, and we're a healthcare dental specialized tenant representation firm who were founded by dentists for dentists 26 years ago. And we have now negotiated over 12,000 dental and medical office leases since inception. The way our firm is uniquely structured is we have everything in-house. So we have an in-house legal team comprised of highly experienced real estate attorneys and lease negotiators with a background of healthcare and tenant representation. We have an in-house leasing team that have access to rental rates and comparables in any given market. So we have the local analytics for that, as well as our proprietary data. And we have an in-house consulting team that essentially work alongside the legal and leasing teams to really help develop a strategy for the negotiations. On an annual basis, to give you an idea of the amount of projects we're involved in, we represent a little over 500 doctors throughout North America on an annual basis. And we deliver over 100 CE credits and seminars and webinars over the course of the year, while also lecturing, and obviously given this year, seminars at the beginning of the year, but primarily webinars until further notice with everything going on, which we will get to some specific updates for COVID-19 and how that has impacted the real estate industry. We also lecture at most of the major dental conventions, such as the Greater New York, Pacific Dental, the Yankee Dental, the California Dental. So we truly work with dentists nationwide. So to give you a snapshot into some of the clients we've worked with across the country, I had our leasing team pull a report of some of our recent clients there as well, just to give a quick snapshot into just the amount of knowledge we have in each specific market. So I had our leasing team pull a couple of market updates. So again, these may not be specific to yours, as it's actually specific to block by block, which is always interesting and in many cases surprises my clients, where rental rates in one block can be very different from the next, or one intersection to the next. And so take these again with a grain of salt, but I wanted to give a bit of a high level overview in terms of what we've been seeing and some of the trends that have been going on. So this is pulled from a location in downtown Boston. And so you've seen the trends of rental rates and obviously the impact of COVID, where the forecasted has seen a decrease. So it's interesting to note as we go through a few of these, one of the big misconceptions is, as a general notice, landlords are going through a fire sale, if you will, in terms of rental rates, where they have been absolutely plummeting. Now, maybe in very specific areas or markets or towns, or depending on the landlord situation, that might occur. But overall, in terms of some of the major markets, just so everyone knows, that's actually not the case. Some have actually held very firm, particularly the larger landlords and institutional landlords, depending on their project and their location. And their portfolio, many have been holding firm at the rental rates pre-COVID. So Some have seen kind of a minor dip. Some have seen more than others, but it has not been as significant as many have thought thus far. So to give an idea through Chicago as well. So again, downtown Chicago. So where things are looking at right now, it's hovering anywhere between about $44.50 a square foot. In particular areas, you can see how vacancy rates have. So typically from a supply and demand standpoint, typically you see as the vacancy decreases, the rental rates rise, vice versa. But you'll notice in some of these areas, they're actually both increasing, where landlords are holding firm on their rental rates, and particularly for tenants like yourself. We're going to get into how a dental practice is very different from any other type of tenant, and why these types of aspects impact you more than anybody else. So this is for throughout Florida, or throughout Orlando rather. So very similarly too. So again, you'll notice the vacancy in the market, rental rates increasing simultaneously. Similar in San Francisco. So for those of you who are on our West Coast in California, so these are by the yearly per square foot. If you're taking a look typically throughout California, a little bit into Oregon for those that are there, and some parts of Washington, you do go on a per month basis. So just divide that by 12 and you'll get very similar numbers. So if you're taking a look here, rental rates have been anywhere between, call it about $3.50, closer to $4 a square foot. Now, the purpose of today's webinar is threefold. Firstly, to teach you about the importance of the office lease agreement and how certain things have changed and altered since COVID-19. Some of the key terms and conditions within your office lease and how they can impact you. And some practical advice, or tips and tricks, if you will, on negotiating the lease agreements. Now, a common question I'm asked regularly: do I buy or do I lease my space? What should I do, Ryan? And so it depends on the opportunity. There's no right or wrong, because it really depends on your goals and what you're looking to do. Is it one practice? Are you looking to open up multiple locations? How much longer are you looking to practice for? Are you looking at single tenant, multi-tenant type of properties? Are you prepared to be not only a practice owner and run that business, but a real estate owner as well? If something breaks down, you're responsible for it. So there's pros and cons to each. And so to go through a few of them today. So if you're buying property, it requires a larger upfront financial investment, because you're not only buying the property, but building out the practice as well. Or if the practice is pre-built, you're typically buying the value of it. Now, for those looking to sell their practice as owner occupants, if we have any of those on today, very difficult for buyers to buy both the practice and the property, as banks don't finance it for first-time buyers, typically. And so for that, there's typically some sort of arrangement where they purchase and call it down a 5-year term. They may end up purchasing the property at that time. But just to be wary of the fact that it's not as easy to sell both at the same time. You become a landlord. So again, you're playing double duty in terms of ownership, not only the practice, but as well as the real estate. But you also earn rental income as a pro. So whether it's from yourself practicing there or another type of tenant, if it's a multi-tenant property, or eventually when you sell your practice, if you hold on to the real estate, you have that income coming in as well. There's greater flexibility on how to use the space. So if you want to expand, make renovations, you don't need the permission of a landlord because you are the owner. And freedom to control property. If you want to expand on the building or put up signage, change the parking lot, that's all in your control. Now, the leasing component requires a smaller upfront payment, greater working capital towards building out the practice. So you might be able to push the type of quality that you want for your plumbing or equipment because you're having the less financial investment and components locked up into the real estate aspect. It also gives you the greater working capital if your goal is to open up multiple locations. That will give you additional working capital to open up that second, third, fourth, fifth location. because some of it's not tied into the practice. So you might be able to open that quicker than if you purchase both at the same time. And the flexibility to relocate or expand. So there was a doctor in Boston I was speaking to who was an owner occupant, owned his building that he practiced out of. The town, unfortunately, took a huge downturn. Everything became vacant, became very low income, which was not part of his practice. And he's had to relocate out. But now he has the building and the property there with no tenant in it and no income. Now it's an expense. Interestingly enough, a dental office lease in either case is critical for it. Separate the liabilities and tax purposes. And for eventual, if you look for the real estate income and investment when you sell your practice, that's the relationship between yourself and the landlord and the tenant. Very similarly on the leasing side. And again, if anyone has any questions throughout, there is a Q&A for those who have joined on since the beginning. There is a Q&A section on your bar. Please feel free to ask any questions throughout. If they are relevant to the time, I will address them. If they're covered later on, I'll address them then. And if not, some of them I may address at the end. Now, what is a lease? So this is a question I love asking and going around the room when we're hosting our in-person seminars. Now, unfortunately, it's a one-way webinar. So as we go through, I'll get answers. It's agreement, it's a relationship. At the end of the day, the lease is what ties you to the space. And this is what most people think about. It's the check you have to write to the landlord each and every month. But many don't look at it appropriately as the investment. So many, when you look at the lease agreement, it will be $5,000 a month over the course of 10 years, and there's going to be set escalations. All most see is the $5,000 a month. And what are the escalations? But if you look at it, when you're making that investment, whether you're looking to acquire or build out the practice, that's not the critical number. The average dentist practices 30 years, some less, some more. Say, for example, you're paying $5,000 a month, and you can do your math based on your rent, counting base rent only, not including additionals. And we're going to assume rent never increases, which I'm sure many are laughing now because they've never seen a decrease in their rent. So we're going to assume it's never increased. Now, what is that investment over the course of your career? So if we do a little quick math, $5,000 a month for a year is $60,000 times 10 years, $600,000 times 3 for 30 years is $1.8 million that you're about to pay the landlord. And that's not including a single penny of escalations. So well over the $2 million mark. That is what you should be looking at when you're looking at investing into a property, whether it's acquiring a practice or starting out. You've just learned the first important component of a lease negotiation. If utilized properly, rent can make or break the negotiation. Now, by no means suggesting to overpay in rent for certain other items, but this is what the landlord looks like. If utilized properly, you can win in the negotiations. But we'll get to more of that in a few minutes. Now, why is the office lease so important? Firstly, your office location is the foundation of your practice. Many of you have probably heard the phrase location, location, location. A lease ties you to that location. It also includes things that might have termination rights, for example, or relocation rights or demolition rights, things of that nature, which we'll cover more in a few minutes here. But location, location, location. If you're a general dentist, typically looking for a high visibility area. If you're a specialist, typically not, depending on what your goals are for, but it ties you to that space. Secondly, the investment and cost to build. So I know many of you have either acquired or built out a practice. It's a large investment. Depending on where you are, it can be anywhere between $200 to $300 a square foot, depending on the type of quality you're looking for. If you're downtown San Francisco, the union laws, it's significantly higher, double, sometimes triple. So very, very critical that the lease is properly structured to protect that investment, whether you're acquiring or building out, because very difficult, expensive, and time consuming to move. So if you've ever relocated yourself or have had a colleague, it takes anywhere between 18 to 24 months to properly relocate a practice on average. Depending on where you are, will depend on the market. If you're anywhere near Southern California, for example, many of those areas, there's very little to no vacancy. Now things have been updated now, but that's the component there. So that is going to be what we're going to touch on in a few minutes. Critical timing in terms of your lease expiry and options to renew. Now landlords also know this. Typically, once you're in a space, you don't want to move or leave. And this can make or break the sale of your practice. Would you prefer your lease works as an asset, or would you prefer it works as a liability? Now, what are three key saleable components of your dental practice? Number one, your equipment and the depreciated value. Very common, typically straightforward. The goodwill and patience. Now, I always ask this at my seminars is, what does goodwill mean to you? Sometimes I have answers where they mention the doctor's reputation, the patient attrition that could occur, the staff attrition that could occur. Now, how do you quantify that? The bottom line is, what is the practice producing? What are the profits? What are the losses? That's how they quantify what goodwill means. The third component is the lease. Now, for example, I've appraised my practice. I'm selling it for $1 million. What percentage of that of $1 million valuation can the lease impact? Again, I'm selling my lease for $1 million, or my practice for $1 million. What percentage of that evaluation can the lease impact? The answer is 100%. Now, I'm by no means suggesting that the lease is worth 100% of that evaluation. It's not, but it can impact 100% of that evaluation. We'll touch on that a bit further in a few minutes. Now, what should your office lease do for you? First and foremost, it should provide fair and affordable financial terms. And I'm not just talking about rent. Rent is a big component, absolutely. But what are the other aspects? Many of you are on what's called a triple net lease or a net lease, where you pay a base rent plus additional rent, which is tied into your proportionate share of taxes, insurance, and maintenance, or common area maintenance of the property. Now, for the most part, taxes and insurance are, we'll say, fairly black and white. The additional variable is the CAM charges, the common area maintenance charges of the property. Unfortunately, not all, but some landlords have utilized that as additional profit center, overcharging tenants for the maintenance on their property. There's a doctor in Denver who we had worked with, we had incorporated into his lease essentially the right and the responsibilities of the landlord to provide him with detailed and itemized statements of the costs from the previous year when they do their reconciliation. So not just a general reconciliation where you don't see much, a detailed and itemized statement, and including in the right to audit those statements. and the landlord's books to ensure essentially there was no funny business. Unfortunately, what had occurred, he noticed that the snow removal expense was 4 times the amount and the average in the area because it was the landlord's brother's business. So very, very critical you have full transparency in terms of what you're paying for. There's another doctor who had a miscellaneous charge for $4,500. I asked, what was this for? He said, I don't know. I said, did you ask the landlord? No. Did you pay it? Yes. I couldn't believe it. I know it's a miscellaneous charge. Know what you're paying for. There are other items such as the free rent or fixturing periods of your lease. If you're looking to start up a practice or expand, the fixturing period is when you gain possession of the space and you have time to build out for construction, but you don't have to pay rent, typically just utilities. After that, free rent can start, where you have doors open, but you have additional months of free rent to help alleviate some of the additional financial burden. So critical that you're getting an appropriate amount for that. There was a doctor the other day I was speaking with who agreed to 4 months where the landlord had lumped in the fixturing and the free rent period. And so he left probably 3 or 4 or 5 because of the area. He left that many free months on the table. So critical to know based on your area and your property, what is the appropriate amount to have. In addition to long-term stability and security. So ensuring in most cases, we recommend signing a 10-year lease with multiple 5-year options to renew in most cases. What this provides is 20 years of predictability in the space, for one. This will assist in also the transition of the practice, as banks need 10 years of term left on the lease in order to finance an acquisition in majority of cases. The 10-year term, if you're not looking to move anyways, it's like buying in bulk. You typically get a better deal as well. Now, there can be other combinations, absolutely. It really depends on your specific situation. Minimize risk and exposure. Many of you, without noticing, have probably signed a personal guarantee or have personally signed the lease and had no idea. The question is, was it reasonable or is it reasonable? As a new tenant to a property, very common, whether you're acquiring or building out. What should occur though, is as you pay down your debts and increase your asset ratio, and you've shown covenant, paying rent on time for your terms, you should be able to and address this aspect by, ideally speaking, removing that liability or creating some sort of limitation, whether there's some sort of expiry, cap of monetary value, or some sort of blend. As you progress through your career, you need to minimize your personal risk. Incorporating in what's called a death and disability provision. So this provision is essentially how we got our name 26 years ago, where essentially states, God forbid something were to happen to you and you're no longer able to practice, you or your estate would have the ability to either terminate the lease or sell the practice, and it would skip a number of the typical terms and conditions based on the extreme circumstances. We need that provision, particularly the disability component, dental specific. What happens if you're developing hand tremors, carpal tunnel, back issues, neck issues? Very, very common and impact the practice. Maximize your flexibility. So incorporating in either the right of first refusal to expand or the right of first refusal to purchase. So if you have plans or potential plans to either expand or purchasing, having this there so that way if the option comes along, you have first right to it. Now it's an option, not an obligation, but at least you have the first right to. Many say, well, my landlord said they're going to come to me first. Okay, great. Now what happens if they don't? That happened to a doctor I was speaking with 4 months ago. Now his practice is still too small. It's bursting at the seams. That space next door is now taken up on a long-term lease. Now he has to evaluate relocating instead of having a minimal expansion cost compared to a full practice relocation. And enhancing your ability to eventually sell. So again, would you prefer to have your lease act as an asset or as a liability? Now, what's in your lease? So one of the provisions is called the option to renew. Now, this provision essentially states you have the option, but not obligation, to extend your lease further. Now, this verbiage here is found in 90% of the leases we review. And again, we represent over 500 doctors each year. Now, typically, I would give some time for everyone to read it. Now, obviously, we're not in an in-person seminar, so I will go through it through the webinar. And again, if you have any questions, please let me know as well. So the first issue, and as you read through, point out what could be problematic through this particular provision. The first item is provided that Dr. Joe Black shall remain as tenant. Now the issue with this is this means the option to renew is personal to Dr. Black, meaning it does not transfer to a buyer. Where this becomes problematic is if your buyer needs 10 years of term, you would need to commit to 10 years of term today in order to sell the practice. Now, if the options to renew are transferable, as long as you have 10 years in term in total, initial term and option to renew, then you're okay. Now, many landlords will get creative. So many of you will notice the word tenant and its capitalization. It's referred to as a defined term, meaning it's somewhere in the lease it's defined. Now, typically tenant is on the first page of the lease. It's usually either your business corporation or you personally. Now, many will get creative and have some sort of verbiage that says, as long as the original tenant is in the space. So you don't notice it as easily as you would Dr. Joe Black. Very, very critical that you are well aware if your options to renew are personal or not. There's a doctor who sent a letter from her landlord last year, March 2019, where they gave two options. She had conditionally sold her practice, predicated on the option transfer, and had to go to her landlord to gather consent for the option to transfer. Now, her and her local attorney had negotiated a 5-year term with a 5-year option that was exclusive to her. The landlord said, happy to amend the lease, this one line, and have it transferred to a buyer if you pay me $120,000 to do so. They really could have asked for anything because the sale was predicated on it. And they knew how much that sale was going for. It's critical to know and understand this component. Next, it goes on to say, and if the tenant duly and has regularly paid its rent and has performed its covenants and obligations under this lease and has not been in default. So you'll notice the word default is capitalized. So again, defined term, which is the default section of your lease. Now, many, as I go around and ask in my seminar, rent is the most common form of default and the most well-known. But what are the other forms of default? I encourage everyone, if you're not intimately aware of what your default provision states, please, please, please read it. And if not, let me know, because not all forms of default are rent related. If you're in a strip plaza or a mall, it's typically the more common for this next provision being the minimum business hours or normal business hours, which references a minimum amount of time that you have to be open to satisfy your lease. So whether it's 40 hours, in many cases it's Monday to Friday plus weekends. There's a doctor, the long short of it is she had been open Monday to Thursday 9 to 4, closed Fridays and weekends. She went to renew her lease. Her landlord said, no, thank you, and utilized the default aspect, which means she lost her options to renew because it's said and stated in her lease, need to be Monday to Friday, 9 to 5, Saturdays, 10 to 4. She asked why. The landlord said, Panera Bread. They were willing to pay 40% more in rent to get that space. So very, very critical that you're intimately aware of what is in your default section. Leaving garbage in the hallway if you're in an office building or a medical building. Having signage up that you weren't supposed to. Operating a different type of business than what's stated in your use provision. Many, many different types of and forms. But it goes on to say, it shall have the option to renew this lease for a further term of 5 years, exercisable by written notice to the landlord no less than 9 months prior to the end of the term. Now, this is read for a different reason. Less of a concern, more of a critical date. Many forms of this you can see, whether it's 3 months prior, 6, 9, 12, or some sort of combination like a 9 to 12 months prior to the end of term. More, again, it takes 18 to 24 months to properly relocate a practice from concept or idea, or you all of a sudden have to with a termination, to finding the space, negotiating a lease, designs, permits, architect, to doors open. So this is a critical item, and lease expiry is the first date. Options to renew deadline is the second. You miss this, your leverage dramatically changes the day after you miss this. There's a doctor who sent us a picture beside the for lease sign. He missed it by 1 day. Landlord put a 6-foot for lease sign beside. He was standing right beside it. So critical to know your option to renew deadline. It goes on to say, any such renewal shall be on the landlord's then current standard form lease. What this means is, we appreciate, doctor, that you're looking to renew your lease. Here's our new form. We've added a demolition clause and termination right, just in case we're thinking about potentially redeveloping, but we look forward to having you another few years or X amount of time. Now, unfortunately, you can't negotiate that. As it states here, you've already agreed to it. It goes on to say, at the minimum rent to be determined by or between landlord and tenant, but in no event shall be less than the rent paid in the last year of the original term. Which essentially means rent's going up. If the landlord and tenant are unable to agree on market rent within 60 days of exercise by tenant, it's the option to renew. The rent shall be then determined by arbitration based on the market rent for renewing tenants in the building. So there was a doctor in South Florida who we'd worked with who opened up his third office in 2006. Fast forward to 2015. Doctor was looking to renew his lease. Now, everyone may recall what happened in the real estate market, particularly in Florida, during 2008. Plummeted. He went to renew his lease. Doctor was paying $34 a square foot. Landlord offered a reasonable increase to $35. The problem was there were vacancies in the building in the area going for $12 to $13 a square foot. Because he had the rent may not be lower than the original term, that occurred. Now, what happens when you're renewing and you have this bottom line in your lease? Are you expected to go from your 12 to 13 up to $34 a square foot because that's what someone else is paying? What happens if that other tenant could not get a loan from the bank, needed money, asked for $150,000 from the landlord to renovate the space and made a deal with them to increase rents over a foreseeable time? Do you have to pay those inflated rates even though you didn't receive the $150,000? the long short of it is, in this one provision, there can be many, many different issues. And these are all how they can impact you differently in the practice. Another common provision is the assignment provision of your lease. The assignment section essentially outlines the transferability of your lease in the event that you look to sell the practice. So this is found in 75% of dental leases, again, that we review. Again, we represent over 500 doctors on an annual basis, and most of these, most of the doctors we represent, were negotiated by a quote-unquote dental-specific real estate attorney. So let's go through this. The first sentence, if the tenant should wish to assign or sublet the premises, it shall first have received the consent of the landlord. So many of you may not know this, but you need the landlord's permission in order to assign the lease and sell the practice. Very common in commercial real estate. The unusual component about this is that it just states you need the landlord's consent, which means because it's a rainy day, they could deny your consent. Or in many cases, they'll have a few outlines, like needs to be the same net worth as you. Now, how many associates are purchasing a practice that have the same net worth as you who have been practicing your whole career? So we need to ensure the consent terms and provisions are properly structured to facilitate and allow for a flexible sale. What it goes on to say is any such request for consent shall be in writing within 15 days following the receipt by landlord of such request for consent. The landlord shall have the option to A, approve the tenant's request to assign the lease and sublet the premises. 2, decline the tenant's request to assign the lease and sublet the premises. Or 3, to terminate the lease agreement upon the effective dates of such proposed lease assignment or sublet. So A, approve, D or B, decline, or C, terminate. Just for asking for consent, the landlord has the ability to terminate. How much is your practice worth if you don't have a location? I can tell you significantly less. Additionally, should the landlord consent to the assignment or sublet of the premises, landlord shall have the right to revise the minimum rent to be paid during the remainder of the term to the greater of the then current market rent for the leased premises, or 15% greater than the then current rent, which essentially means the rent is going up at least 15%, at least. How does that impact the evaluation of your practice? Could the buyer walk away? Could they ask for a better deal on the practice now that rents are higher, profits are lower? Furthermore, should the tenant receive from the assignee or subtenant any rental income, cash, goods, or any form of consideration in connection with the assignment of this lease or sublet of the premises that is over and above the current base rental rates payable to landlord in any fiscal year during the term of this lease, the difference between the annual rental rate and such rental income, cash, goods, or other consideration shall be paid to landlord directly within 30 days of tenant's receipt thereof. So this can be tricky for many, and there's many different forms and verbiages of this type. Essentially what this is sale proceed language or consideration language, which means the landlord is entitled to a percentage of your sale profits. I can feel the anger, correct? This has entitled them to a percentage of the profits. That's outlined here, when in reality, they should not be receiving any. It's your blood, sweat, and tears that have gone through it. There was a doctor who I was speaking with, and They'd been in their space for 36 years. Their landlord was a quote unquote family friend of theirs. 22 of them, was a patient as well. And he conditionally sold his practice, predicated on the lease transfer. He had gone to his landlord as per his lease to ask for consent, quote unquote family friend. And the landlord said happy to, on one of three conditions. One, your rent goes up by 35%. Two, you pay me 50% of the sale proceeds, 50. Or three, I terminate the lease. It was a $1.6 million practice sale. What would you do? It goes on to say, notwithstanding the landlord's consent to any assignment or subletting, the tenant shall not be released from its obligations under the lease and shall remain liable for any failure of the tenant or its assignees or subtenants to observe each and every covenant of the lease. Meaning it's called ongoing or continuous liability, where even if you get the consent of the landlord to transfer the lease, sell the practice, you remain liable for the lease obligations should the buyer default. And if you've signed your lease personally or have a personal guarantee, that's also you personally. And I'm not sure if anyone noticed the expiry. There is none. So if that incoming doctor continues to renew, you're still on the hook. There's a doctor out of Michigan I was speaking to at the end of 2017. I'll never forget. He had sold his practice, moved down to Southern California to retire, was on the beach 8 years later, received a call from his landlord. Buyer defaulted. Again, this is just one provision of the lease. Second one that we've spoken about today. We need to ensure the assignment subletting section is properly drafted so that way you can sell the practice and have the flexibility to have a smooth sale at the end, gaining maximum value with little headaches throughout. Now, there are some other traps in the office lease. So these are not limited to, these are some of the main ones as well. So items like a demolition or a redevelopment clause that essentially states the landlord has the ability to terminate your lease in the event they look to demolish or redevelop the property. Typically, it's on 30 days notice. Obviously, not practical for an office a practice relocation. Or the relocation clause where the landlord has the ability to relocate you from your current space to another space in the building or property and make you pay for it. Or financial statements where the landlord has the ability to ask you for your financial statements, whoever is on the lease. And if that's both the business and you personally, that's both of those financial statements. How do you feel giving your business and personal statements to the landlord? Common when you're moving into a property should not be common through a term. As long as you're paying rent, there should be no issue. Now, many ask, when is the appropriate time to begin these types of conversations? So it's the tenant lease cycle. We recommend at least 24 months out, if not further, from expiry to begin the conversations and negotiations with the landlord, and for a few reasons. So A, leverage. So again, it takes 18 to 24 months on average, depending on where you are, to relocate a dental practice. The landlord knows this too. So it gives the perception, at least, that you have the ability, if they're unreasonable, you have the ability to relocate. Most don't want to, but it gives the ability and flexibility to, if absolutely necessary and properly. Also, you'll notice with the option to renew deadline. Some are up to a year, some very rarely, but some are up to 2 years or 18 months prior to expiry. You want as much time prior to that option to renew deadline for negotiating, because once again you miss that option to renew, or the closer you are to, the less leverage that you have. So 24 months or more from the lease expiry is the ideal time to begin negotiating. So that's the third component in the lease negotiation. So first and foremost, rental rates play a big part. Again, utilizing them strategically can help you win in the negotiations. Timing at least 24 months out from expiry. And thirdly, typically, again, in most cases, not all, but most, those that are looking at a 10-year term, again, it's like buying in bulk. You have significantly more leverage. Now, critical dates and risk analysis. So essentially a lease review. This is one of the services that we provide, but to give you an idea what's been going on today and what our sponsors have done as well. So it's essentially a $1,500 value, $1,495. And essentially what it entails is an economic and legal analysis of your lease, where our leasing team completes their due diligence on rental rates, comparables, as well as our proprietary data. So obviously doctors that we've worked with in the area. While our legal team goes through the legal terms and provisions, highlights all the risks, exposures, liabilities. We schedule a call with the doctor, go through their goals, their plans, their visions for the practice, the lease and how it can impact them based on those strategies and goals, and then essentially a treatment plan at the end. Now I want to thank everyone for joining today. Our sponsors, of course, have actually covered the cost for everyone to receive their lease review complimentary. So we do thank Henry Schein for that. So if you are interested in your lease review, certainly do encourage, there's no obligation. And if you are curious on whether it's a specific provision in your lease or the whole lease in total, happy to provide that feedback to you. So again, what I'll need on my end is a copy of your original lease, any extensions, amendments, estoppel certificate. So if your building's been refinanced or sold, send a copy over to us, info@cirrusconsultinggroup.com, and we'll schedule some time. The lease review is typically about an hour long. So let us know a few dates and times, and we can go through everything in detail. If your lease does expire within 24 months, I highly recommend we begin speaking ASAP. If you are what's called a month-to-month tenant, where upon 30 days notice, you or the landlord can terminate the lease as you're expired. We need to talk ASAP. Please put urgent on the subject. If you are further out, we're still happy to have the conversation and just give you some feedback on your lease or any other particular real estate matters that you're curious about as well. Now, please, if anyone has any questions, if you would like to utilize the Q&A, feel free. If not, if you would like to connect directly, please let us know. Give our office a call. The number's below, the info@cirrusconsultinggroup.com, and we'll schedule some time to go through any specific questions or concerns that you may have on a general basis as well. But it's been a pleasure, everyone. I hope everyone enjoyed the course. Hope they found it insightful. If you do have any questions, please let us know as well.